Hey everyone, remember it is your trade, your responsibility. If you're okay with that, let's keep going here. So, pretty a big day today. You can see the Nasdaq, the Qs starting to break out a little bit. That is very interesting. It's been more of a broadening lately, where the Qs have kind of struggled a little bit. But here's the SPY, which of course has a lot of the big guys in there. So not surprising. But NASDAQ is the catch up story today. IWM, another breakout to all time highs, right? That's small caps. But pulling back a little bit from the highs as we rotate just a little bit more into growth, right? So we're getting a little bit of a bid in the Mag 7, nothing massive. Apple's not doing a whole lot. Microsoft's not doing a whole lot. Google's doing the usual, which is, it's the greatest stock in the world in AI at least. And then Amazon's had a big run lately. And you can almost think of Amazon as a bit more broadening in a sense because it's consumer discretionary. And of course, with all the AI benefits and the cloud, and also, of course, they own portions of LLMs and things like that. So a lot of money to be made there in sort of those little things those little portions of companies that they own. So just a little bit of a pullback here. And then, of course, semiconductors, really beautiful pullback right to that breakout spot yesterday and then blasting off again today. We have ASML going bananas. That is the Dutch maker of very, very expensive, very, very large, heavy equipment for chip making. And then here's Micron really shrugging off yesterday's sell-off down about 7 or 8% to make all-time highs again. So really some of the old stories are coming back, but as well as some of the broadening themes, right? We've got FCX doing well, and we've got some of the power names doing well as well. So we see VST, which has really, really struggled lately as they've sort of moved out of power, out of AI, pure AI, and some skepticism as to, perhaps whether we need quite as much power, or if the sort of texture of everything changes from a power perspective. But Meta investing in 𝐬𝐿 and VST. So they're really getting a nice bump today. I sold out of my 𝐬𝐿 as well as my SMR on this pop. I did mention a couple weeks ago, 3 weeks ago, that I was picking up a basket of these really, really hammered nuke quantum power type stocks. And we've had a little bounce back. But I don't expect some of these techie type moves to really, really continue too strongly, because I think this broadening theme does have some legs to it. Let's take a look at some of these ratio charts. We, of course, had those beautiful employment numbers, non-farm payrolls, which came a little bit weaker, but not collapsing, right? So I think the takeaway from that was that the porridge is kind of warm, right? It's not too hot, not too cold. The worry predominantly has been employment, because inflation looks like it's more or less under control for now. And so the worry is, well, are we about to fall off a cliff from a job standpoint? And that's a concern for Trump, because in an election year, you've got midterm elections. You have the pressure, right? You've got the pressure. His approval rates are low, and so that's why you're seeing some of the things that they're doing, right? He wants to make sure that we are as dovish as possible. We know that Powell probably has just the one more meeting to come. But based on this information, they're probably not in a massive hurry to cut, so I don't expect to cut this time. But again, Trump really needs to kind of project to people that the CPI is coming down. We're going to get some inflation numbers next week. CPI, inflation coming down. And they really need to continue to focus on that unemployment rate. If it gets close to 5%, it is not going to be a good thing. And we already know that the youth unemployment is up around 9%. So, Trump is going to do everything he can. He's gone into Venezuela. He's getting cheap stuff from all over the place, massive amounts of oil and minerals and things like that. He's doing what he can to keep oil down, keep pricing down. He's pushing housing now. He's trying to appear very sort of accommodative and trying to help the people, which is great. And so there's this pressure to really, it could be a year where he's really going to kind of go full on. And we already know that we've got this big, beautiful bill. We got all, like, it's very difficult for the Bears this year, unless we had some sort of technical reason to sell off, and then, it snowballs. It's just so much going for this market right now, especially considering the broadening that we're going to talk about. So this is interesting here. Here's the mid caps, Russell mid caps versus the small caps. So the mid caps are actually not doing as well. They've pushed into small caps, and really, I think some of the opportunity actually is in the mid cap. So for me, I think it's an opportunity to maybe pick up some of the mid caps that are doing well. Remember, this is just a ratio, right? This is mid caps versus small caps. They're both doing well, but small caps are doing just a little bit better right now. And I think that's kind of an interesting thing that is playing out just for the moment. So let's take a look at some of the other ones that really give us an idea of what's happening. Look at this. This is your small caps versus the Mag 7. Boom. Complete breakout mode. We're going to see a couple more charts that really look like that. Here's your sort of mid value to growth, kind of just getting going, right? Remember, the mid is kind of just sort of getting going here. So that could be where we see some opportunity. Here is the small caps versus the Qs, the NASDAQ 100. Today, we've got a bit of everything going on, but the small caps are kind of taking just a little bit of a pause here after having a pretty good run. Really, really pushing that to members, pushing the small cap, the broadening trade. And I've been saying you don't need rates to necessarily come down, and that's in fact what's happening. They're really doing well, despite the fact that rates may not come down as quickly as people think. But look at this beautiful channel here. This is a 3-year chart. If we look at the 1 year, we can see this range that it's been in, a pop up there in the morning. Let's see if we can get above here for a few days, and that's going to start looking pretty darn good. I think it will happen because that broadening is happening. Here's your Dow, right? Here's your Dow. Let me show you that Dow list again. Here it is, right? So now the Dow is the darling Dow, because it is very diversified. And when we get a broadening out like this, when people are moving from sort of future growth into right now and real economy and broadening across many, many different areas of the economy, then the Dow starts to look very, very interesting. But even though it's price weighted, it's got financials, it's got the important ones for this buildup. Remember that infrastructure buildup, the Caterpillars, the equipment makers, you've got Boeing in there, you've got pharmaceutical, you've got some tech, of course, some of the bigger tech names, you've got JPM. I mean, this is really a very nice cross-section of things that could work very, very well. Honeywell, Johnson & Johnson, kind of, it's funny, consumer staples are actually doing quite well today, despite the fact that that growth is doing well as well. So it's a bit of a weird day in that respect, but we've got a whole bunch of stuff in here which is really like real economy stuff, and much, much less sort of polluted by the heavy weights that you see in some of those mags. Let's keep going here. We have got industrials versus the broader market. We can see this just still has a little ways to go here, right? So if we look at industrials in particular, there you go. Nice, beautiful breakout happening there. There's no question we're getting better levels, though just relatively speaking, it still has a little bit of work to do in terms of industrials versus sort of the broader market. So I think we're going to continue to see that do pretty well. Banking just maybe taking just a little bit of a break today as some of those other things continue to play out. So let's take a look. Let's take a look at a couple of things from Bank of America. So this is their gauge, right? So we've got very, very bullish. And I talked about in my last couple of videos, I talked about how cash levels are extremely low. You can see here's cash positioning, 97th percentile. That's very bullish. So when you see these very bullish signals, that's what leads us into a more cautionary, right? It's a bit of a contrarian view, is that when things get too bullish and everybody's on one side of the boat, then things get a little bit unstable, right? So we see hedge fund positioning, very bullish, a little bit more room there. Equity flows have been huge into the market into the end of the year. Credit market technicals, pretty, could get a little bit more exuberant. And then breadth is really beautiful because of this broadening that we're talking about. And you can see here, hopefully it's not too small for you. You can see this Bank of America bull and bear indicator. It's at 9, right? That's very, very, very high. It doesn't really get a whole lot higher than that. So we are a little bit extended, but the way that you can possibly think of that is that we are moving. Remember, the index is going to reflect what's happening within it. And right now, we kind of have a little bit more pause on those tech themes, those big tech themes, which are very heavily weighted. And we have a resurgence of other kinds of things that we're going to talk about. I'm going to do a little series. I'm going to start this weekend on all the things that are really mattering right now. And I call it drop it on my toe theme. These are things that we can touch and feel and that we really need for that global build out, right? Very real things like copper. We know that some commodities have been doing really, really well, but I think this has the potential for years and years of a tailwind behind it, because I believe this resurgence in industrializing the world, reindustrializing the world, is very, very powerful. And I'm going to tell you why. So you want to start to think physical. I know we've been trained like Pavlovian dogs to always think about digital, 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 maybe a little bit of robotics with Tesla. We always think of digital. Now we want to start to think a little bit more simple, a little bit more physical, a little bit more obvious, but things that almost you can relate to, touch and feel. There it is. So we're rebuilding the world with things like that we need, like metal, we need machines, we need engines and generators and concrete and people fixing stuff. Think about it, dilapidated old electrical grids and old infrastructure. Just think of it from this perspective. I read not that long ago that the average home is at a record age in the US, 40 years or 41 years old. And you can imagine that so much of the infrastructure that's out there, we hear about bridges, that need fixing. We hear about roads that constantly need there are so many things out there that are not only sort of old and dilapidated, but we are entering into a phase where we need them to work better than ever. We need them to be efficient. We need power to flow without any physical bottlenecks, right? So it is a very urgent situation that I think is going to be addressed, and we're going to have to spend a whole bunch of money, and that's what's going to help with jobs. It's what's going to also help these stocks that we're going to be talking about. So I'm not going to go over them today. I'm going to get into them in the next video, but I'm going to give you a preview. We're going to talk about number one, electricity and power grids. So we're going to talk about names like GE Vernova that are making sure that there aren't those blockages, that things are flowing and not overheating and things like that. Very, very important grid equipment. So we've got a couple of other names in there we'll talk about. Number two, big machines, right? You can drop one of these babies, it's going to crush your toe. But we've got the names like Caterpillar, of course. They're going to be very, very important. They're involved in so many things in the world that are related to what we are talking about. Now, Caterpillar's had a good run, but remember, what I'm thinking is that we have years of potential strong storylines. Remember that headline risk? Headline risk can be negative, can be positive. This is the positive kind of headline risk, where it is just a good, solid, durable story. And these guys think of all the mining equipment that's required for oil, for everybody. These guys make everything as well as, of course, the dump trucks and everything else that's important. Number three, copper, steel, raw materials, right? We have machines, and then we have things that the machines need to function. We have the things that go into all the infrastructure, the buildup, the copper wires, things like that. So, of course, Freeport-McMoRan, which we've been doing well on, looking for another entry point. Number four, cement, rock, and building stuff, right? So names like Martin Marietta, stone, cement, those important things, of course, that we just take for granted, that we need more and more and more of it. And these companies are going to have pricing power that is amazing. Think of what's happening with Micron. They can charge almost anything they want for these memory chips. This kind of stuff is going to be happening to various degrees in other areas of the economy. So chemicals, coatings, and insulation, boring old Dow. We talked about the Dow Jones Industrial Average. How about Dow Chemicals, right? We need all this stuff. It is part of, the things that plastics and insulation and you name it. There are so many elements that go into what we're talking about. Think of what goes into building a house, all the details, all the materials, all the planning, everything. Very important. Number six, generators and backup power, right? So we're going to need more generators. We're going to need more of the power sources to be taken care of, and we're going to need we're going to need to invest in the companies that really are helping to maintain, to get out there, boots on the ground, figuring out where the problems are and getting to them in this with all this old dilapidated stuff that's going on. And then number seven, controls and automation, right? So Rockwell Automation, those kinds of names that are helping those grids run automatically, efficiently, factories, very, very important. We are going to see a boom across all these areas. So I'm very, very excited. You know, this is going to extend to just like stuff like Corning, right? Corning, maybe you should like grab all that glassware that you've got in your cupboard. Maybe it's going to be worth a little more than you think one day. But there is going to be, especially if you start to look into the optic sector. You see, I think there's a few stocks like COHR, which are in the business of providing that physical infrastructure that is going to enable us to sort of carry the loads, the electrical loads, the information loads that are going to be important, and copper wire can't really cover it all. So there's sort of the interesting areas of where things are going. So we're always trying to think of where's the puck going, right? Not where's the puck, where's the puck going? That has been really the key to really, for me, at least this past year, why so many people got it wrong. So I said, listen, this is absolutely massive, more massive than anybody thinks. Nobody had, I mean, there were certainly some people, but really a lot of people very skeptical of AI, and it is underway, and AI is everything, right? There's pure AI, there's AI adjacent, there's just AI is infused. So think of it as a funnel that began with a certain number of names like the NVIDIAs and the Mag 7 names that really benefited from people starting to get on board. But as that funnel sort of widens out towards the top, it starts to affect everything, right? So AI is really everything. It is there for anybody to use. It is cheap. It is plentiful. It's not like the internet build out. The internet build out was physical build out, getting people online, getting people to figure this stuff out. It was time consuming. Now you've got AI, an expert in your pocket instantly in the phone that you've had all along. You've got it on your computer. It is a very, very easy transition for somebody to get into AI, whereas .com was really actually kind of creating the physical infrastructure and then getting people on there to believe in it and to take it on. That just took time. This is happening immediately. So the effect of that is only going to be limited by the way that people take time getting into it. And we know a couple LLMs are getting close to 1 billion users. So we know that people are adopting it. But again, this year is going to be the year of adoption. So we're going to talk about all these things in the next series, but by no means is pure AI out of the picture. That is going to come back at some point in a strong way, because this is early innings in the inference stage. And I think that we just keep going. There's going to be endless compute, endless data being created, and endless innovation on the agentic AI side of things. This is going to be the year where we see an insane number of agents that come along that are going to be addressing specific problems, right? So it's no longer just like ChatGPT is kind of cool. It's how is AI going to address my problem, and what solution have you got for me, and how are you going to help me run my life and my business and all that stuff. That is where we are going to see amazing innovation and wealth created. And lucky us, we have the ability to invest in these things if we were paying attention. So stick with me. I'll see you guys on the weekend as we start this series, and have a wonderful evening, and we'll see you next time.